can you just give us a recap on why the markets have been so soft as of late and why they've traded down to levels that we haven't seen in the last 9 weeks?
The market has been largely very weak over the last few weeks. I think the reason is there's been no catalyst, near-term catalyst to drive the market forward. Yesterday we saw First Bank drop to a 2-year low of about 11.97, and that effectively had an effect on other banks like Guarantee Trust Bank and UBA closing lower as well. However, I think that irrespective of the fact that the market is actually being weak at the moment, it offers investors an opportunity to re-enter the market at these levels and rebalance their portfolio and average down. I think the market is offering us right now really cheap stocks, and I think it's time for people to start buying.
So where are you looking? Which stocks for you look particularly undervalued at this stage?
I think the banking sector largely remains very attractive, and if we're talking banking sector, I'm focusing on the top tier 1 banks, so named largely First Bank, GTB, Guarantee Trust Bank, and in the second tier, our recommendation is to look at Sky Bank. We think that there will be, largely because there is a deadline in September for the closing of deals between the failed banks and potential NEM activity. We think there will be a flight to safety in the banking sector, and the banks who are positioned to gain from this, uncertainty will be these banks. We think that they offer good value at these levels.
Apart from the banking sector, we've seen subdued activity on the Nigerian brewery sector. Nigerian breweries managed to collect over just under 1% yesterday, but overall subdued volumes there. What's driving that lack of activity?
Effectively because the banking sector has been lagging. We've seen you've seen aggressive movement in the non-financial space, and a lot of these stocks have actually run and outperformed the market relatively. So I expected to see a little bit, reduced activity in the non-consumer space. However, I think that if investors need to key into names that they believe in, high strong conviction names, we have a buy recommendation on WAPCO based on our recent cement report release. And we think that investors should largely look at names that have a strong 5-year outlook, expansion plans, growth strategies. Taking perspective that Nigeria, has a strong demographic and it's a demand-driven economy. We think that a lot of the companies in non-financial space also stand to gain in the near term. So I think it's a case where investors need to have a conviction on the market and just really stick in there. If you don't believe in our market, who will?
Talking about those consumer-related stocks and tying it into general economic pressures at this stage, we had Central Bank Governor Lamido Sanusi coming out saying that inflationary risks are high for the economy and that this would mean that they'd need more aggressive monetary tightening. We saw at the last monetary policy meeting, they hiked rates by 50 basis points to 8%, and at the last meeting in March, they hiked by a percentage point. So they have been quite aggressive to date. Would you expect more aggressive tightening at the next monetary policy meeting, and to what extent?
It's tough to say at this juncture. My view is that I believe the CBN governor had seen inflation going uptick, and he had taken a step to preempt that by increasing the MPR a few weeks ago. However, I don't think he will be hiking the MPR further. But I think again, inflation, interest rate regime is a huge risk, and the CBN will be making sure they do everything in their powers to make sure we put that on, control that.
Some traders, though, are expecting further interest rate hikes, and they're saying that given the anticipation of this, we do see some investors going into the money market instruments and moving into bonds which offer higher yields than equities. Is this something that you've seen on the ground?
Well, that's what we're saying. You effectively see that a lot of the banks, the money market, the 90-day money is something around 15%. The Nigerian equity market has done only 1% year to date. So, you typically know where you need to be, which will be bonds, and, naturally will be bonds and the money market. So I think, those will make sure that we'll see the equity market lower at the moment. But however, I think equity market remains very, very cheap and very attractive, and that we should not ignore it, even though we see huge, upsides in the bond market and money market.
Given the fact that it is low and you say there are some entry level stocks that you'd be eyeing at this stage, where would you be positioning your money and how are you diversifying your portfolio? Are you putting any of your money into bonds and you know, what percentage are you putting into bonds and what percentage are you putting into equities?
I mean, speaking to a lot of the PFAs, we was realizing that a huge portion of their capital is being put in the bond market. Effectively, based on the the guidelines which governs the PFAs, PFAs have a 25% limit to invest in equity market. However, we're seeing that a lot of people are not at that cap or at that borderline. You have a case where people actually have 70% exposure to the equity market, and so I think in the near term we'll see a lot of interest in the bond market and money market until we see sort of a catalyst in the equity market. However, the equity market is definitely it's too attractive at this point to be ignored. That is my view.